The World Bank has this week drastically cut Mexico's economic growth forecast for 2025. In a surprising update, the predictions now show stagnation at 0% GDP growth. This reflects the deepest trade uncertainties in a decade. Just earlier this year, the World Bank projected a growth of 1.5% for Mexico. Now, this significant change indicates prevailing economic challenges ahead. This new forecast is part of an early chapter from their forthcoming report focused on organized crime and violence in Latin America. When we compare Mexico to 29 other Latin American and Caribbean nations, only Haiti is predicted to perform worse economically this year. Haiti's economy is expected to contract by 2.2%. Conversely, Guyana is slated for impressive growth of 10%, and Argentina is forecast to expand by 5.5%. While the cut in growth projections is concerning, there's a silver lining. Since 2018, social programs and job creation have reduced poverty in Mexico by 7%. This accomplishment marks it as the best improvement in Latin America. The World Bank also downgraded the 2026 growth outlook for Mexico from 1.6% to 1.1%. This assessment reflects a broader instability, with the region facing both challenges and uncertainties. The World Bank emphasized a troubling external environment. Changes in U.S. tariffs pose significant risks to shipping and job sectors in Mexico. Recent tariffs on steel, aluminum, and cars made in Mexico add to the tension. Negotiations for exemptions are under discussion, but the future remains uncertain. Despite these issues, Mexico recently signed a new trade agreement with the European Union, crucial for diversifying trade markets. In light of these concerns, President Claudia Sheinbaum disagreed with the World Bank's forecast. She highlighted the significance of domestic projects under Plan Mexico, aiming to bolster infrastructure and industry. She maintains that public investment has been pivotal for recent growth. She also noted substantial private investments, including Grupo Modelo's commitment of $3.6 billion. There's more. Current inflation rates and the Bank of Mexico's interest rate adjustments are additional indicators of economic health. The recent data shows inflation rising to 3.96% this April. International forecasts may vary, but Mexico's current investments and strategies aim to navigate through these uncertainties. Stay tuned for the future developments in Mexico's economy and how strategic decisions will shape its growth trajectory. Visit mexiconewsdaily.com for more.